Hey, Mike. Thanks for being here. There's two of us here. Oh, now Jax is here too. He was sound asleep. He's trying to figure out who the heck I'm talking to. Well, anyway, hey, okay. So I was supposed to have a nightly show on the QLDY trades. I love the lightning spread. I want to start specializing well, I want to talk about the lightning spread more, even having a daily show on it, especially if it catches on. But I screwed around and waited too late to do it tonight. So let's just have a late night, but I'm going to do the lightning spread report first. So let's share the screen. We'll do the lightning spread report. There's Marcus. We'll do the lightning spread report, but then this can go wherever you guys want. Maybe I'll even clip the lightning spread report. But yeah, maybe, I don't know. Probably not. All right. Well, I just remembered I forgot to do something kind of crucial, but well. All right. So the lightning spread trades are in. Okay. First of all, big news: the lightning, the fund is growing. The fund, well, the fund right here is. It says it's only worth 3.79 million, but on the balance sheet, it's worth more. I think it takes a day for it to catch up. But anyway, they now these guys now have two big contracts. So they bought a second big contract today. So each contract, it's a deep in the money call option, but this is on the NDX. These things are worth $2.3 million. These call options literally cost $2.3 million. This one they bought cost $2.3 million because it's deep in the money. It's like 1,000 strike. Anyway, yeah. But anyway, so and they have two of those now, so that's 2.5. But in any event, on the balance sheet, they are worth, let's look here. On the balance sheet right here, they're worth 6.3, but for whatever reason, it doesn't say that till the next day. Maybe there's a delay between the day they get the money in and maybe the day until they can put it to work. But you can already see, but we'll keep an eye on this. In any event, more money is coming in, the fund's growing. It started at 2.5 and it's already worth 6.3, which is exciting. Or it'll be worth 6.3 by tomorrow, because these are the assets minus the liabilities. This is everything they have. But the exciting thing is, see where it says NDX2, they have two of those. That's worth $4.7 million. So that's their portfolio. That's the long component, covered call strategies. And even though it's a lightning spread, it's everything's a version of a covered call or whatever. But so you have a long, and then you have a long component and an income component. Let's just say that it's an income strategy. So there's the long component. Perfect. Now, the income component, they sell options, ODTE options every day, and that's what we're getting ready to look at in a second. But that's their long component right there. So if the market does well, that does well. It just performs just exactly like stock would. It's just like, because it's so far in the money, it's just like having stock. Anyway, but what's exciting also, I'm trying to think, are these bought or? Oh yeah, and they're also look at these where it says XND. Those are the smaller options. So they're also using smaller options to get long exposure. So right now they have two big ones and 55 small ones. The small ones are worth a hundredth the size, I think, or a tenth. Anyway, together you add everything together and you subtract the liabilities, and it's 6.3 million, and that'll be the AUM tomorrow. So that's exciting. The fund's growing. I'm watching it grow every day. So as far as as far as the trade goes, it's right here. It's these bottom three lines right here. I don't know if you can see that. Am I sharing the screen? I think I am. I'm trying to do this for you. Okay. Well, I was trying to just maybe okay, these are the trades we're looking at. The very bottom thing is just them buying that deep in the money option. So that's, that's not really an income trade. That's an investment. But there are other ones. They sold an option short, just like they do every day, SS and buy. So the one they sold short is always more expensive than the one they bought. The one they buy is just so they don't have unlimited loss, because as you know, SS sell short means you sell something you don't already own. So the loss on those trades is technically unlimited, but they buy another put and it caps that loss. Anyway, together that's a nice trade. So the one they sold short was the 470. If you're tracking it, $76. Then the one they bought was the 450. I'm trying to think what that is. The 24,700 or the 24,500. Okay, so it's 200 points apart. Is what so 24,700 is what they sold short, and then they bought to cap their loss the 24,500. Anyway, the one they sold short was 76. The one they bought was 14. The difference was $62. That equals, trying to think that, I don't know why it says that. Anyway, I have an error in my formula here. Let's see. Sorry about that. But in any event, but that equals, if they made that much every day, it would be about a 36%. You could see the different trades they're making every day, project 45, 31, 49, 38, 36. The average, and we'll get over, and they've also missed a day or two in here. So when you include the missing day, we'll look at that here in a second. But this day right here, it'd be, if you annualized it, it would come out to 36%. If they made this income every day on the assets they have. And this is only saying they have the 3.7. We know they have more, but I guess it hasn't hit the book for this stuff yet. It hasn't gotten to work. And I guess until they can put it to work in the market, it's not fair to put it here. In any event, okay, but we'll definitely keep an eye on this. So the thing that's interesting about this, here's two things. So yesterday there's 75,000 shares yesterday, and there's still 75,000 shares today. We did an estimate of the trades that had happened so far yesterday, and I'm pretty sure that was the cutoff, because I've heard they make up their mind on Monday. So I don't think that the Monday's trades are in there yet. I'm pretty sure that's good. Anyway, so if that was the cutoff, I figure they're going to pay 28 cents a share. And they don't pay till Thursday or something. We'll see. Now, if if that wasn't the cutoff and you just kept it going, it would come out to 30. They would be at 37 cents a share right now. So they made an extra 9 cents. In any event, so I'm trying to think. I'm probably going to treat it as just, because I think that's probably the cutoff. That's probably, I bet they pay something around that 28 cents. Then I bet this 9 cents goes in the new time. I'll have the paperwork fixed by next time. That's what my estimate's going to be. We'll know on Thursday, right? Because I think they pay on Thursday. It goes X tomorrow, or tomorrow's deck day. So anyway, we'll know soon enough. When we know, we'll fix the paperwork. But in any event, in any event, at least we have something to look at, and we have the positions and we have the historic positions where we can go back and we can look at how anything's changed over time. And I forgot to update this chart today, which is just how it's doing versus cash. Anyway, my apologies. Let's do this though. Let's do this. And let's do this. We're also going to look at, I'll take questions. I was going to look at ULTY. Oh, well, not ULTY. I was going to look at maybe blocks. We'll look and see if blocks has any new stocks or whatever. Okay. So here's the results for QLDY. I should have made this first. I should always lead with the chart. Well, you can see we opened here. We're pretty much sideways. Up a little bit, down a little bit. That other graph was just charting what the SPY has done versus what this has done. I bet you it's pretty flat. It's been pretty flat, so we'll see. So we'll see how this QLDY is. I have real high hopes for it just because of what they're doing, especially in a bullish market. Like I always tell you guys, the lightning spreads I really think the lightning spread's good. Now blocks is probably it's a distinction here. Blocks is more like a hedge fund. And it's also, they aren't doing lightning spreads indiscriminately, but they are doing lightning spreads on about 2/3 of the portfolio, and it's a big feature. But they're also selling calls and other stuff, and then they're uncovered in something, and these guys. So it's a different deal, but that's cool. I like an actively managed. All of Howard's stuff actively managed. I like that. But I also love the idea. I mean, the idea anyway of the systematic ones, the ones where you just set it and forget it, and the strategy, does the heavy lifting, and it doesn't hedge or anything, and it's kind of your job to get out of the strategy, before the market goes bad or whatever. Well, anyway, and so those types of ones can be really successful. Also, look at the round hill ones. XDTE, those are some of the best ones. QDTE, XPay, anyway, and that's what this is, the lightning spread, but it's just lightning spread done on the index every day. But so far though, they aren't doing it on the whole index. So that means they're partially have some. They're even more uncapped than they otherwise would be. So anyway, the jury's out on this. We're gonna have to see when they get going, because they're gonna try to pay twice a week. What kind of income they can make paying twice a week and stuff. This is gonna be really interesting. I mean, the twice a week especially. I wish they would just pay on Friday. It'd be fine, right? I mean, if they could just pay once a week, just for estimating its sake. I know that you guys are probably happy about the twice a week. Anyway, so that's QLDY. So let's see. I do want to kind of specialize on the lightning spread on this report. So we'll look at blocks too. So look at blocks. My gosh, you gotta be kidding me. Blocks, you're insane. And Jax is looking. He goes, "Why are you talking like that?" He's like, "Who's in here?" All right, all right. All right. Okay. Blocks is insane. So let's look. The crypto quartet is kind of limping along, but let's see. Let's limp over here to the blocks. I thought the block section was Working. Yes, I think these are the new stock positions in blocks. Okay. Well, this is the performance today too. I mean, it was up 6.4%. I mean, 6.9 is what it was up. The average. This is insane. Look at this. This is insane. This is the lightning spread for you on a bullish day. On a bullish day, you get the market, but and you really get credit for whatever the expiring puts. You know, you get the market plus a little bit. You know, you get the market plus a cushion. You know, so anyway, it's nice. And they only do lightning spreads on like 2/3 of the portfolio, the stock portion. I think it's about 2/3. They have other ones they do call spreads on and/or no spreads on. One of these they're just straight long in. I always forget which one's which. It doesn't matter. I let them worry about that. These guys know what they're doing. I mean, these guys know what they're doing. So let's look. So, but do you see anything new? I mean, CoreWeave, Circle. Let me look back here. I'm trying to see Galaxy, Hood, Riot, Iron. That's a good one that I know a lot of people love. HUD 8, Taiwan Semi, NVIDIA. I think they've added one or two. It seems like this is getting longer, right? NVIDIA, Coinbase, Mara. This right here, so what is that? Cypress, or I always forget, or Cipher. We should probably look at that. Well, anyway, we'll look at that later. MicroStrategies, HODL, FBTC, Bitcoin Trust, Ethereum Trust, and they have a lot of these. They aren't shy at all. Diversification, smursification. They don't care about any of that. Just give me more. Give me more. They don't want to spread, you know. I mean, look at this. You know, most and I don't mean that, but most hedge funds, most even ETFs will at least have, you know, like, I mean, that's like pretty that's pretty unconcentrated. Most of them, like most of the ones we look at, I'm trying to think, like even FEPI or whatever, the most they have is about 7 or 8%. You don't really see ones with 16, especially two hold with 16%. So I guess we do, as some funds do. Those are different kinds of funds. There's funds that have like 60% bond, because those are like hedged equity funds. I guess they do have like huge holdings. But anyway, this is a big concentration. And it's a concentration in DeFi, not even really DeFi, but Ethereum and Bitcoin. And whatever's in HODL, I'm never sure, because we sometimes get a bad quote. There's no way it was down 2% today. It's just a bad price, but that's fine. We know it's a good one. All right, but that's exciting. It's a great day to be that one, wasn't it? Because this is based on today's results are still up. Let's look. I wonder if Alti's results are still up. It looks like they are. Looks like it was a good day to be Alti as well. We probably should have seen this at the end of day report. Hood, yeah, Hood's insane. I mean, Hood's insane. All right, what do you guys want to talk about? You guys want to talk about something, we can. There's only 7 of you here, and that's fine. It's late and stuff. I just wanted to come on and do I need to do that every night. The nightly report. I'll get better at that, but because that would be easy and stuff. And I really think other people like that also, that also, hey, and I bought that fund today, QLDY. And I also bought WPay, and I also bought blocks. I'm wearing my blocks hat. And I had to sell some really good funds to do it that I hated to do, but I was up, but I also had big profits in them. I made a whole video about it. So go watch that video. Um, but anyway, yeah, I finally I've been threatening to do it forever. And if I would have done it when I started talking about it, when did I say I was going to buy blocks? I mean, pretty much as soon as it came out, I was like, okay, yeah, I'm going to get this. But and then I kept saying, when as soon as I rebalance, I'm going to get this. And then I was like, I'm going to get this. And I mean, look at my hesitation. I mean, so let's look at a daily chart. I mean, I don't remember when I fell in love with it, but it was somewhere. I mean, who knows? As soon as because the lightning spread's all I need to know about it. I mean, it's that because it's uncapped upside. Um, not even uncapped. It's uncapped. Plus, you get a bonus from the expiring puts. As you know, though, the downside is there can be a little extra kick on the downside, but as long as the market goes up, you don't have to get anything to worry about this. And this also, like I say, blocks is not just lightning spread. Blocks is a way more complex strategy. What they're doing with their stock selection and everything else. So, but QLDY will be just the lightning spread. That'll be like a pure. So we'll see. And I don't want to get the two of them confused, but I do want to talk about blocks because I think it's a trailblazer. And we'll talk about it on the lightning spread report. So anyway, okay, that's it for the lightning spread. Sam says thanks for the lightning spread. Or the lightning spread, and I'll do that every night and get better at doing that. So anyway, I'll get better at doing that. All right, what else you guys want to talk about? What's going on this week? Anything? Is there any news coming out or anything? I'm trying to think. What I'm doing. I have some content to get out. Tomorrow I'm doing my fund of the month, and that's going to be a good show, I think. It's going to be on right at 3 o'clock as soon as the market closes. Fund of the month, maybe the max factor fund of the month or whatever, because the month will be over at 3 o'clock. Or maybe I'll do it at noon. It'll be close enough. No one really keeps counting. But who knows? But I'm going to do it sometime tomorrow. So, and then I also have another piece of content to put out. So what's the market doing down? It's not allowed to go down. Come on. Look at that. It's down 7 basis points. NASDAQ is too. You got to be kidding me. That's ridiculous. Come on. Come on, guys. Bitcoin's been strong, as you guys know, the past 4 days, gone straight up, but kind of came down to a potential support area where it made a swing low before, and it looks like it's trying to put in a swing. It looked like it put it in. Now we're back here on the high side of it. Anyway, we're going the right direction. Going the right direction. Was there a gap in the SPY this morning? I didn't cover it. Anyway, but I'll get better about doing the lightning report. And yeah, of course there was, and it filled a little bit, and it looked like it's probably a decent place to buy for a day trade. Looks like the fill was supportive, and then it bounced up into the close. All right, and well. Yeah, that's on SPY, right? Okay. Yeah. All right, so I'll get the crypto quartet working better. I guess let's look at LFGY since we're in here. I'm trying to make it where it gives me the changes, but for whatever reason, it's not working right. Anyway, but okay, so previous day, LFGY, but that's not what I want. All right, there's LFGY stock positions. So I guess we could do this. Check this out. So this is based on today's closing prices, but boy, I hated to sell this today, but at least I picked an all-time high, you know. And I bought another asset way too high, but I sold this asset way too high to buy the other asset. That's what I'm telling myself to make myself feel better about it. I mean, I guess I could have sold this asset, waited for a pullback, but that's not really what I'm trying to do, because then also if I would have done that, the market would have kept going. And I'm just trying to allocate to Bitcoin. And I just think blocks is a little better allocation. But man, LFGY has not been a bad allocation. It did really well today. Oh, I can't believe I got rid of this. I probably should have kept this. And this will do better on the down times. But anyway, that's fine. That's fine. I don't know how much better. I mean, have you guys ever thought about, okay, so of course it'll do better in the down times, but blocks does so much better in the up times, and you have generally more up times than down times, that I'm thinking over the course of a year, I'm thinking blocks will do a little better overall. But despite the fact that it technically will do quite a bit worse in the down times than these other ones, or, because it does so much better and has the uncapped upside, it'll be so much further ahead before the bad times get there, is kind of what I'm trying to say, if that makes sense. Anyway, I need to do some kind of study on it or something, but the blocks and QILD are really interesting. I'll tell you the other one that's super, 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 super interesting, and it's out now, is this one, ETHI. And it's not that interesting. It would be more interesting if it was based on the SPY or the Qs, and they have one coming out based on the SPY or the Qs. It just isn't. Same fund, though. And what this does is they use a synthetic. So they just get them a synthetic, and they leverage it up to double. So so they're double long, and then they sell a covered call on it. But they're leveraged to double, but they sell one covered call on it, so they can still get plenty of upside, and they still get and they get incomes. It's income plus growth, and the leverage, because of the leverage, anyway, supposedly. And I've tested in the Tastery back tester, and it tests really well. That this strategy is actually really it's using leverage and using leverage and a like if you use double leverage and then sell a covered call on a full, back test really well. So anyway, I just don't have much interest in ETHI, but the one I'm looking forward to is this one. Well, they have some single stock ones out there that you guys might like, I just don't need all that extra risk. But I guess I just don't know. Let me see. I think I can find it right here. You guys just hung around this long. Let's check this out. There we go. This is what we need right here. SPXI and QQY. This one, QQY. Think about this. So it's double leverage. So it's a double long. They're long. They use two synthetics because synthetics are cheap. So they're using leverage. They should have been doing this the whole time. This is how a trader would do it. They're a hedge fund or something, but you use a little bit of leverage. Or a trader would use it, and I'm kind of surprised they haven't done more poor man's covered calls, because a trader would even get more leverage by doing some kind of calendarized poor man's covered call. Anyway, whatever, that's traders. But this is like a hedge fund would do it. So they're doing double long through the synthetic, and then they sell a covered call. It's covered call spread, I think, on the whole account. And so they don't leave half of it uncovered. but it doesn't really matter because they sell on, because it doesn't matter that much because of the leverage, because it's double leveraged, and it leaves left over as if uh, it's like double leverage is 200. The covered call strategy subtracts 100 from it. It leaves them 100 left over. The idea is, and I've tested in the tasty trade back tester to try to use leverage plus a covered call strategy and try to end up with the full upside, the free money strategy. Of course, there's no such thing, but you can get close. It's an interesting concept. This is the next frontier. But I don't know that this is any better than the lightning spread or than LevMax. Do you guys know about LevMax, don't you? LevMax is going to use options in a similar way as the lightning spread. The lightning spread is double long between 2 points. The LevMax is going to be triple long between 2 points. They're going to get local leverage, and they're going to get anyway. That one's not even out yet, but there's some coaches has some influence, or coach and some other influencers have had some good content on that one. I'm excited about this one. This is the most exciting one coming out. I mean, because it's just so. Look at this. I just don't know why. Who cares about single stocks? Why are they doing it on Circle? And it's the sign of the times. I'm such a boomer. No one cares about the NASDAQ and the SPY and stuff. I mean, all they want is it on Hui and stuff. And they're coming out with leverage funds on underlines that I haven't even heard of. Defiance does a leverage fund on something, and I was like, "What is that? I've never heard of it." It wasn't income, but it was just leverage. Anyway, check this out though. You guys might like this since you're already here. We'll check this out real quick. We'll check this out. I'll show you why I'm excited about it. But this is the new frontier, maybe the final frontier. For a long time, people in Canada, our friends in Canada, have been saying, "Hey, when are you guys down there going to get ones with leverage? We have ones up here that use 30% leverage, and they pay, and they have like great, and they love them, and they're like, and they work out, and they get upside, and they get, and anyway." So lately, that's kind of what Roundhill's been doing. They put 20% weekly leverage on, get a little bit extra, and do what the swap, and worked out just fine. People like the W series, right? I bought some W series today, just kind of a starter position, just 6% in my model portfolio. Okay, anyway, so here we go. So what's this one? Mag 7. I mean, I like this idea, so. I didn't even see this one. This is such a great idea. They're going to get. Hang on here. So get this. These funds seek long-term capital appreciation with the second objective to seek current income. That's what I'm saying. Because they're using the double leverage, it overrides the covered call. And it makes it as if, it's supposedly. I'm trying to see if I could read. Anyway, but I didn't even know they're doing a Mag 7 one. But let me see if I can just find the one. The Qs and the SPY are kind of what I like to talk about, and what you guys, what it's kind of a good standard to compare other stuff to. But that's interesting. I didn't know they're doing one on Mag 7. That ought to be interesting. But I mean, these are going to be interesting. Defiance, that's the thing. Sylvia Specialty leverage. Her most successful funds are the leverage ones. Her $1 billion fund is the leverage misters, right? And she has some other ones. She came from Direction. That's in her. It's in her blood. She's a leverage gal. So, okay, here it is. This is the one, though. Look at this. Leverage long NASDAQ. I mean, you got to be kidding me. This is incredible. Fees, I don't even care. Well, all right, 1.49. That's pretty steep. Okay, well, anyway, okay, and I do care. That's pretty steep. That's pretty steep. Let's see what they do. Okay, they're an actively managed fund. Okay, seek to achieve investment objective through a combination of leverage and income. I think I explained it right, but let's just read there. Leverage strategy aims to amplify returns by employing derivative to achieve exposure to share prices by unaffiliated, passively managed ETFs that seek to track the performance of the NASDAQ from 150 to 200. Okay. In pursuing the leverage strategy, the fund will invest primarily in swaps or option contracts of the index, blah, blah, blah. Okay, the income generation strategy complements the leverage strategy by utilizing credit call spreads. I don't know why they didn't do lightning spreads, but anyway, by utilizing credit call spreads to seek to generate premium income and manage risk associated with the fund's leverage exposure. While these strategies are designed to enhance potential returns and mitigate risk, it may limit upside of a leverage strategy. The fund seeks to achieve its investment objective primarily by entering into derivative transactions. So the fund uses leverage to seek daily returns of 150 to 200. Although the fund's leverage will vary, it can target 200. I'm trying to find the thing in here where it says here. The fund employs leverage to enhance total returns of its long exposure of the index. Under normal market conditions, the funds, it's already said this 100 times. I'm trying to see where it talks about their income component. Okay, here it is. The fund will write credit call spreads. I love this kind of stuff to generate premium and manage risk associated with the leverage exposure of the index. Blah, blah. Okay, the fund's credit call spreads are generally implemented on 100% of the fund's net notional exposure to the index via the underlying securities. For instance, if the fund employs leverage 200%, half of the fund's effective exposure to the index via the underlying security will be offset with the call spread. So what does that mean? It means half of it won't be offset, and half of 200 is 100. This is it's a sneaky way to try to have your cake and eat it too with this leverage. That's the whole idea. So, or it's like a fund that sells options on half. It's like a fund that does cover calls on half the portfolio, except they're like, hey, we're going to double leverage and basically do it on half the double leverage portfolio is a way to think about what they're doing it. They're doing it on the whole portfolio, but as they would have the effect of doing it half on a double, whatever. You guys get it. Yeah, I know you guys get this. Anyway, this is exciting, and this is the future right here, and that's what I'm excited about. That is what I'm excited about. And QLDY, I mean, we're going to find out soon. When do they, their deck days like, let's look at this real quick since I got you guys here. But ETHI is the only, there's other ones out there, but there's the only index-based. I don't care about the single stocks. Ether's basically an index. It's kind of, it's because it's a whole, ecosystem or whatever. But anyway, this ETHI, I'm watching this to see what they're doing. But in any event, leverage plus income is going to be a beautiful thing. because the idea is it leaves you over the full upside. You get the income without any sacrificing of whatever the upside from. I mean, that's the idea. Now, you can't. There's no guarantee it works like that, and they don't really say that. But that's I read between the lines in the prospectus, and when you go back test it, that's kind of like you could see that's something you can shoot for to get the full upside of the asset. But the lightning spread's the same deal. They just do it in a different way, and the lightning spread really kind of uses leverage too. Between those 2 points, they're double long. So I think they may just be variations on, I think that they're both great strategies that have the potential to get extra upside. That's all I'm trying to say. All right. Well, what else you guys want to talk about? As soon as QLDY does strike, here's what I wanted to look at. I always type QDLY or QLDY, or there's another big one, Global X, QLDY. Yeah, no, that QLDY is the good one, but I type it the wrong way. I mean, now I do it the right way. So I just don't see how it's 3.79 million, but I downloaded the latest sheet. But I think there's a difference between when the money goes in and when the money hits the trade balance sheet. So it's good to see money's coming in, though. All right. I was going to show the distribution schedule was right here. Deck day's 9:30, so that's tomorrow. So that's exciting. So really, maybe they could have their meeting tomorrow also. I thought I heard their meeting was Monday. Anyway, we'll know. But if their meeting's tomorrow, I'm going with 39 cents a share or 37 cents a share, and then 28 cents if they're meeting. We'll see how much they pay and try to figure it out. But anyway, and then they'll start doing it every 2 days, and it'll get easier once we figure it out because we know how much they have to pay with. Well, I've seen every trade they have. I do think they missed a day that they didn't post. If anyone knows where all their trades are, let me know. But anyway, all right. Well, I don't think anyone else. I don't know of any other influencers that are following this one. It's going to be interesting though. But so deck day's tomorrow. So and X days. So if deck day's tomorrow, when do they announce it? Will they announce it tomorrow, or will they announce it on the 1st? I wonder if I should have an announcement show or whatever. Or there it is right there. They've already announced it. Right? Is that right? Yeah, it looks like they've announced it. We're sitting here watching it. I mean, is that right? Yeah, I guess that's right. And I could see that. Okay, so let's go back to the sheet. Let's go back to the sheet here. I put it up here. It's just 28 cents. So they're saying 19 cents. Okay, that's fine. They could easily pay that. They had 28 cents to pay, even if they cut it off, and didn't consider yesterday's little payment. Okay, yesterday's probably goes on next time. Anyway, okay, I could see that. So they paid 19 cents. The thing is, though, 19 cents for a week isn't that good. We need to. Anyway, it is what it is, though. Let's look over here. Lightning spread. So Well, I was gonna. It's too soon to annualize it. All right. Well, um, anyway, that's interesting. Okay, so deck day is tomorrow, but they've already declared. Did you guys see that anywhere? I guess I could look in my email. I bet in my email. Um, maybe in their like official wording, it'll tell us what dates the payments are for. I guess maybe I need to ask Sylvia to be on if I'm the only one that's going to cover this fund. I just think this fund, but like I say, it's not only this one. These other ones are all defiance too, and these are the most interesting ones out there, along with Alti and along with blocks. Um, so if they paid a dividend today, or if they announced a dividend, they would send a. Okay, I don't have anything. There's no way that they just. Are we looking at that right? QLDY, 19 cents. Huh. So if that's weekly, that'd be about $9.88 in dividends. This tank costs $50 though, so that's not great. It's 20%. It's actually really good. It's actually be perfect. You could get 20% in full upside, or full upside and then some. 20% plus double upside, 20% plus triple upside. That's what I want. I want 20% for sure, plus triple upside in an up market. In a down market, I still want to get my triple payment, and I don't want to lose any NAV. Do you guys know any strategies that work out like that? Anyway, this strategy is pretty dang promising. Also, because according to they've made more than that. They made 28 cents a share. They've only paid 19. So if that's the case, that they'll go and they've made more than that. Now they've made 37 cents, but they've only paid 19. So we'll carry this forward to the next one, and and whatever. I'm excited about this. Yeah, I know there's 2 payments a week. I know that, but I know it. But I'm saying, doesn't it look like they declared the first one though? I'm just surprised. I know there's 2 a week, but they're starting with. But right now they've had like 5 or 6 days, and they've declared they're making a payment. So the first one I think is going to be based on like a week. But you're right. Then after that, it's going to be every 2 days. I get it. I know that, but that's why I'm just trying to figure out how they're doing this first one. And they paid 19 cents, and I think that's probably for like 5 days or whatever. But yeah, but I know what you're saying. You're saying it's 19 cents, and that's only. I got you. Okay, well, if that's the case, then if that 19 cents, that's a half a week payment. They're going to start right away, and that's fine. Yeah, if that's a half a week. Yeah, and then you figure it out. That's 40%. And if this thing pays 40% and you get full upside, can you even imagine? I know that's the plan in the future. I'm just thinking because they started off, they've done like 6 days and they haven't even made a payment yet. So, just saying the first one is going to maybe be a bigger payment or something. That's all I'm trying to factor out. But yeah, but then as soon as they start making payments, and it looks like the first one's 19 cents, but then they're going to be every 2 days. Absolutely. But yeah, you're right. In my estimating, I should have multiplied it by, because it's twice a week, by 104 instead of by 52. And I would have come out about a 40% divvy, which would be marvelous. Dude, that would solve everyone's problems. A fund that gets full upside and pays a 40% dividend. I mean, it's okay. So that's probably not really realistic. But even if it does close to that, I mean, wouldn't that be great? Even if a fund could do close to that, that would be so wonderful, so wonderful. But yeah, no, I get it now, Eric. I appreciate it. I appreciate it. I can't see the screen in real time. I mean, I have to look back and forth. But anyway, I always look back. But yeah, or maybe I should make the nightly show, the nightly live show. Maybe the Lightning Live, do this. But I still think I probably should just record a show and have it on every night at 7, a short show that does the Lightning trades and the Lightning dividend estimate. Because once I get on the right timing, it ought to be easy to do because they aren't doing anything complicated. I mean, I know to the penny they've made $27,444 because they just sell options and they have the prices and they let them expire. I'm not factoring their costs in. I didn't put their commission, but but aside from that, I'm pretty close to what they're making. And they have 75,000 shares. They only paid 19 cents a share. So far, they've earned 37 cents a share. They've sold 37 cents a share worth of premium. They paid 19 cents a share. That's fine. So, maybe here in 2 days they'll pay. Yeah, if they pay 19 cents a share twice a week, let's think about that. Okay, 40 cents a week. 40 cents a week. I mean, yeah, that'd be pretty good, wouldn't it? That'd be pretty good. I mean, we'll see. I mean, this thing's just getting started. I'm kind of a little surprised they aren't selling more options because now, especially now that they have, it's not just today. Yesterday they had the extra money in. I saw the money that come in yesterday, and I saw the extra shares yesterday. But they could be selling. In other words, instead of just selling one spread, they're selling one spread. They could sell one spread, and then they could sell that XND. They could sell 55 little spreads because they have 155 units. Now they have 255 units because they have another big unit. They still have the 55 small units. So that's their longs are 255 small units or 2.5 big units. And a unit is $2.5 million because it's however much the in the money, the at the money NDX is going for. Right now, I think it's selling for 22.4 million or something. But anyway, be that as it may, but yeah, I love covering all this stuff. I'll try to figure out a smoother, better way to do this. Anyway. Okay. Hey, yeah. Okay. Thanks for the comment, Judge Dredd. I hadn't seen you around here before. Appreciate you being here. Where can you find the Lightning spreads? Their website only shows the correct. Great question. Oh, I love this. I love when I can actually help somebody out. It does, and it took me a while to figure this out too. I used to do earnings. I used to do estimates for other Defiance funds, Triple QI and WDTE, and like a whole lifetime ago, more than a year ago. Anyway, I did them for a long time though, so I knew where to look. So you go look at leverage, or go look at ETFs. I just hit income. Click on any of them. I just click on Triple QI. They should really fix this. Defiance, if you're listening, I guess I need to get them on the show. But anyway. I need to get them on the show. Okay. So just click income. Just click triple. Okay, we're there. Okay, so then go right here. It should be this way on QILD, but it isn't. It should say intraday trades. right here, it does say prospectus, summary prospectus, and SAIE or SAI. It does say those three, but it doesn't say any of the other stuff. It doesn't say intraday trades. But you can go over here, and these are the intraday trades for the whole company. And any of them give you the intraday trades for the whole. So what you do is you grab it right there. Your computer will download it, but then you have to go. This is kind of a pain. You have to go open a spreadsheet, and then you have to go file, import, and then you go upload, and it'll be the last file yours. I guess you go browse, and it'll be the last file that you uploaded right there. Boom. And I just hit replace data, selected cell. Okay, so now you have all the trades for the company. Then you got to go clip them out. I do this every night. Then you got to go, boom, you clip them out, you hit delete, and then you hit the ones, so you hit delete, and then you have to go hit the ones on the other side of it. Sometimes I like to look at the other trades and see what all they're doing, especially in the leveraged plus income ones. But anyway, I just deleted them now. It's fine. It's not that interesting. But so then you go like this, boom, delete. There you have it. So these right here this is kind of it usually is just the leveraged, just the lightning spread is over here. I think tonight they actually bought a long over here too. This thing cost $2.3 million and they bought it. And because they don't use leverage, or the lightning spread does use poor man's leverage a different way, but they pay for this. This cost $2.36 million and they bought it. So that's just part of their, that's part of their long. And they, people say these ones don't own the stock or whatever. Well, yeah, they don't, but these guys own this instead. They don't need to own the stock. They own this and it moves just like the stock. So anyway, but as far as the lightning spread part goes, it's these other two up here. It's these other two up here. Going back down here, the one that's 2.3 million. See that right there? This is a what's called a flex option, but the strike price is 1,001.44. They have weird strike prices, but it's only 1,000. Think about that. It's the strike price, and the at the money option is 2.47 or something. So sure enough, what's the difference? 2.37. That's why this thing costs the difference. It's just like buying the stock. You just own the whole index, So anyway, so that's your long. But anyway, so the lightning spread is this: 76 minus 14. They sold the 24 sevens and they bought the 24 fives. Okay. So their profit was the difference between these two. I think, was it 6,300 or something? But then remember, the other side of that is you're on the line for the difference in the strikes, which is 200. So that's 20,000 less the 6,300 you collected. So 14 or whatever, right? Is your risk. So if it blows through. So a big move to the downside is a $14,000 loss. I mean, you get the 6,000 or whatever, but that's the risk on that. That's the other side. To settle the trade up, you have to pay. You're on the line for the difference between the strikes if it goes all the way through there. So, and that's in one day. Or 24. I don't know how far away that is. I don't really look at NASDAQ that much. NDX. We can start though if we turn into lightning spread experts. I'm telling you, this funds the stuff. N blocks, and the leverage plus the income is the stuff. But so is blocks, and so is this. We're just getting, I mean, they've got all the normal funds. They've tried them. Some strategies worked, some didn't work. They're all, none of them are Ponzi schemes, whatever. Some worked out better than others. And, some worked out great, some not so much. But now, 2 years down the road, we're getting the ones that are coming out are getting more advanced. So it's an exciting time. So NDX, they probably did it right on the open, the 24/7s and bought the 24/5s. So the 24/5s where they're trying to keep it, they want to settle, they want it to close above the bottom strike. Anyway, we could start looking at the strikes. It's too late. By the time we see these, the day's already over. So it's not that interesting, but we could put a box on here as to the one they buy and the one they sell. We used to do those profit boxes all the time. But anyway, yeah, and we can start looking at the NDX. I mean, the NDX is a fine contract. I just say trade the Qs. Now the Qs aren't cash settled though. I mean, you have to worry about early exercise and assignment, and if you have the money, the NDX has all kinds of advantages. But for smaller traders, you have to do different strategies and stuff. But the Qs are good, and then also these aren't too liquid, but smaller traders can also use the XNDs, and they're getting more liquid. I mean, the funds are using these, but this thing is like it's a micro contract. Look at its contract. Is that? Oh, I thought it was like 246,000, but no. I think its price is. Oh yeah, its price is like 246. All right, but each one of these, it takes like each one of this is a 1/100th size contract or something. But anyway. All right. Well, do you guys want to talk about anything? Anything you want to talk about? We sure can. Hey, Brad, what are you doing? I know it. I just saw that by accident, Brad. No one was free. Did you guys not see that? I was showing the fund off here. We were talking about what day's distribution. We were over here looking at and I had it up because I was saying, I know it. It's 19 cents. See, I'm so glad you're excited about it. No one here was really that excited. I said it like 3 times. I said, "Looks, it's just been announced. It's 19 cents." It looks like they could have paid 28. I mean, I don't know why they just paid 19, but maybe they'll save it some for the next time to steady it out, and that's fine. But yeah, we were looking here. I was trying to show people when the distribution was, and I was saying, okay, deck day's the 30th. Okay, so tomorrow, and I was going, now when do you think they'll declare? And I'm sitting here talking, and I'm seeing this 19.56. This happened like 10 minutes ago. And I'm going, look, guys, they've already it's 19.56. Are you serious? And so I guess they declared sometime tonight. But I was sitting here, pulled this up to try to figure out when they were going to, I was going to have a, deck day show. But I'll start doing these shows for deck day. They'll probably start declaring, well, they're going to do this twice a week. So I'm going to have to figure out how they do it. But anyway, yeah, we follow the trades here, Brad. If you're just here, they have my spreadsheet's not really that much to look at, but they have about 37 cents a share they could pay with. But even as of yesterday, they had 28 cents a share. They only paid 19, meaning they're hiding 9, maybe even an out because they're paying twice. We're going to pay twice a week, and so we'll see kind of how they get going. But I have their trades in here. I think they missed a day, but maybe not. Or there's 2 days that they missed. One day they gave me the same trades back to back. Look at 924 and 925. They gave me different dates, the same exact trades. So that tells me they just didn't have a trade that day. There's no way it was the same trade, the same. No, it doesn't happen that way. So they just did. So I didn't count it. So anyway, but yeah, they're doing fine right now. They're paying somewhere between 20 to 40%, right? I mean, depending on it depends on how frequently they pay. We're going back and forth on that. Brad, I'm glad you're here. Thank you for being here. I appreciate you for being here. But yeah, but you guys saw that. Did you guys, anyone that was watching the show, I don't think anyone's paying attention. The people that are watching the show are probably doom scrolling and just have me, which is fine. But anyway, no, I discovered that in real time. I was sitting there talking anyway. I should clip that if I knew how to clip stuff. Andre Brown. So yeah, seems like, yeah, it does. They're going to go for 35 to 40. But now that's, there's other ones out there that get 35 to 40 right now with good upside. And let me pull some of those up. I was thinking XDT from Round Hill. For a while it was just matching. For a while, XDT was just matching the SPY. Now lately, the SPY has pulled away. I mean, nothing lasts forever, but XDT is still an impressive. It's still an impressive fund. Let's look at QDTE versus the Qs. And I've never even had them on the show. I'm not a Round Hill influencer, but these funds right here. So they paid over a year and a half. I'm trying to figure out the dividend they've paid. Hang on here. All right. So over a year, the dividend they paid $12 on 42, 12, 24, 36. It's 1/3. It's a little less than 1/3. It's 25%, 25, 30% or something. And, they haven't got all the upside of the Qs, but for a while they were. And they're getting a good portion of it. And they're getting a good portion of it. So let's see if there's some alternatives out there to those that can make that. Because we want 35 to 40 with, tons of upside. So anyway, but that's one way to get it. FEPI doesn't give us 35 or 40, does it though? But let's just see how FEPI did this year. FEPI gave us 20 all day long, though, 25 or something, 22. Plus good upside, 15% upside. That's really good. What about old LFGY? LFGY is a tough one. I know I just sold it today, but hasn't been around a year. But it's it's a good one. What about old Alti? Let's see how Alti's done over the past year. Underperformed the Qs just a little bit, although it was spanking it earlier. But it happens. Dividend $6 on 60%, 67%. About is what you ended up. 67%. NAV went from 1029 to 547. So be aware you made 67% on the dividends. So you factor that all in, lost about 50. In other words, lost about 50% on NAV, made about 17, 18% on dividends and everything. So total return was about the difference, about 18%. But that worse things could happen than making 18%, so anyway. That's the one we want, is we want to make 40% and get full upside. What about, I guess you could do that in something like GUI, just because its parents had just a It's kind of unfair to choose GUI. GUI got a 33% yield. Okay, great. But a GUI got really the upside. The price just went up $1 a share. But I guess GUI's just doing better lately. But over a year, it's doing all right. It's not doing. 24% is good. Don't get me wrong. 24% is good over a year. So GUI had a total return of 24%. Let's check GOOP from Curve. Who do you think has more total return? I say GOOP. Yep, 29. Not much, 24 to 29. GUI has a little more yield. GOOP has a little more total return. Just the way it works. Well, more yield. So GOOP has a little better NAV return, which lots of times, but not often, not always, leads to better total return. So many good ones out there to choose from. But yeah, the lightning spread, I don't know which one I'm more excited about. If I'm more excited about the lightning spread or, we got 3 out there. They're going to be basically the same. There's so many out there that make basically the same thing. There's nothing wrong with triple QI. Triple QI, let's look at triple QI. See if there's anything wrong with, maybe there is. We're talking about funds that pay 30% and get tons of upside. This thing easily pays more than 30%, paid 13 on 30. Yeah, it pays, that's more. And it got 14% over a year, paid 30%. This thing's, let's look at triple QT. Now this thing just pays 10, but look at all the upside it gets because it just pays 10. So, pays a 10% dividend and gets tons of upside. Was up 18% for a year when the index was up 25. So many good choices out there. What about, and we haven't even talked about QDTY. Now, this one hasn't done quite as well, but it hasn't been around a year yet either. So right now, the LevMax isn't even out yet, but right now there's QYLD. But then there's going to be one coming out that's leveraged plus income that we just were talking about. And that's going to be called QQY. So the interesting ones to me are going to be QLDY, the lightning, QLDY, and then QQY. But then they're going to have a LevMax product come out. It's going to be triple leverage between 2 points. That ought to be interesting. And then they have these other ones that aren't bad. Triple QT looked really good. Not bad, nothing. Triple QT and triple QI are really good. Anyway, they have a lot of products that are right there in the same niche. Right now, I've hitched my horse to QLDY. I'm always tempted to say QYLD. QYLD is the great fund from Global X. It's been around since 2012. Great fund. Let's look at QYLD. These guys sell covered calls on the NASDAQ. They underperform a little bit. They sell at the money calls, so you leave a little bit of money on the table. Not much, but a little bit. Well, you don't want to be that manager. They switched their formula at some point to sell out of the money. I think 2021 maybe or something. Let's see if they've done better recently. Not really. I don't know what the deal is with this fund, but anyway, notwithstanding that fund was a great fund as far as it started a whole industry. And really JEP-I and JEP-Q and some other big ones. But really that one, I mean, there's another one from First Trust HI, FTHI. See FTHI, that's a covered call one that's been around forever. I think it's been around since like 2016 or something. Yeah, 2014. And it leaves a little bit of money on the table too. It doesn't leave as much money on the table as the other one. Let's compare both of those ones that have been around forever, FTHI and QILD. Now it's not really fair. One's based on S&P, one's based on NASDAQ, but the S&P one is beating the NASDAQ one, so it doesn't matter. I mean, and it should be. It should be the NASDAQ one should be beating it. So that First Trust is quite a bit better. That QILD, not the greatest fund. There's a better version out there called QILG, which they only sell options on half the portfolio, but it only makes 6%, but they get tons of upside. And you can see QILG beats FTHI, but in any event. But back in the day, there was FTHI, QILD, XYLD. In 2020, I think JEP-I came along and JEP-Q in 2020. But there was, I think there was a put right fund out there, Neuberger or Berman, S-Put or Put W or something. But it wasn't like anything that special or whatever. But you had two or three, chances. Really, the best one was QILD. I make fun of QILD, but that one's to help people retire. Even though it has some NAV issues, it pays a steady dividend. And if people that needed income and use it like a bond or something and use it to fund, a retirement, it can be a step in the right direction. I'm not besmirching it. I mean, I just never did understand why they sold the at the money option. That's just, anyway, what do I know? Everything's in hindsight, everything's. But no, I don't understand it because there's a study, and the study has been out since, I don't know, maybe like 2015. Maybe the study came out maybe after the fund was invented, that to be fair. But there's a study out that shows the benchmarks. The Chicago Board of Options Exchange, they have all the records going back to 1986, and they show every option strategy. They have benchmarks, and they have the at the money call. They have the 2%. They have the 1% out of the money. They follow the 2% out of the money. Then they follow the 30 delta. Then they follow the half overwrite, and then they follow the weekly variation. So they follow all these things live in real time, and they have since the 80s, and they have this database. But since the 80s, there's one of them that's outperformed, and I'll try to find this back test, but it goes from like 86 to 2012 or something. Over like a 26-year period, it's outperformed buy and hold. So it beat the SPY. It did the mythical thing that these things never do, and it beat the buy and hold by a little bit, by a couple of points. And it was the 30 delta. It was selling the out of the money, and that's what JEP-I does, and JEP-Q and GPIX and a lot of ones do, is selling the monthly, and that's what it was. It was selling the monthly 30 delta. And I think the symbol is BXM, but it made like, 11.7%, and buy and hold made 11.5 or something over the test period. It did the mythical thing. So anyway, that's kind of the magic, and that's what they think. Right now, the kind of state of the art is you go to the 30 delta is like 4 or 5 strikes out of the money in the monthly time frame, and you do that, and that's kind of that's usually your best. And that's why a lot of the ones that people say are so steady. Oh, guess who does that? Triple QI. Triple QI does that strategy, basically. And let's look how steady Triple QI is. They do. They do out of the money. They definitely do out of the money. I don't know exactly 30 delta. And I mean, they did probably do something more advanced than that. Triple QI beats the index lots of times. But I'm saying, but as far as the benchmark, there is a benchmark out there that uses the 30 delta, and it spanks the index over like 26 years. So, and I think, I've made content on it before. There's a lot of funds I think that are based on that. JEP-I and JEP-Q being the two foremost. These guys have all the data and stuff. Anyway, all right. Hey, yeah. How are you doing there, Froggy? Thanks for being here. All right. What did you do? You picked up a couple of shares of NV2 while we were talking? Sweet. Badass. Badass. Yeah. I'm hoping for 25 or 35 to 40% out of the lightning spread, the QILD. Plus full upside. That's all. I mean, come on, 30 or 45% and no cap on the upside. I mean, that would be? It'd be like free money. I mean, so anyway, pretty good little crowd here. There's 11 of you guys here. Anything you guys want to talk about, put it in the chat. Other than that, I'll let you guys go. I'll get the lightning spread show down better. So anyway, and I got to get some more content out. There's some shows coming out. There'll be a show or two out tomorrow. My end of the month, the ETF of the month comes out tomorrow. That's going to be a big show. It comes out tomorrow at market close. So tune in for that. Okay. All right, guys. Thank you so much for being here. And I will talk to you guys tomorrow.